Hello, this is Steve Landal with His Capital Group, and someone recently asked me the other day, what's the difference between active and passive real estate investing? And actually, it's pretty good timing. Um, I've been a passive investor for 10 years now with His Capital, and in fact, this month it's been 10 years since I've worked with them. So it's almost like an anniversary message here, if you will. I've been an active investor, a real estate landlord, if you will. I bought my first one when I was 18 years old, and then my wife and I got married at 20 and 21, and we lived in one of those units, and it allowed us to live for less because we had the rent from the other unit supporting us. Then we added on to that, and we had I believe we had maybe 13 units at one point. And so we were landlords for many years. Up until about a year ago, we sold all of our properties now. So I officially today am not a landlord, and I am 100% passive, a passive real estate investor. So the difference between passive investing and active is, number one, I don't deal with tenants, and I don't deal with water heaters anymore and toilets. The more important thing is it gives me security, and it's a predictable monthly income. And I guess the things I would look for as far as an active to a passive is you don't have to be high risk. Certainly you can be conservative, and I recommend being highly conservative in a passive real estate investment. And what I mean by that is know the originator, who's originating them loans, create a relationship with them. I personally like a boutique-sized company. His Capital Group, I believe, lent $50-60 million last year, which isn't huge, but that's pretty big for a boutique company. And yet it gives me that personal experience where I'm only a phone call away from help and assistance from the entire team. The other thing I look for is I look for that company to originate the loan. And what I mean by that is in-house, they know who the borrower is, they know the property, they've got a wealth of experience of years of vetting properties and vetting individuals, the borrowers. Once I understand that, I gain a comfort level, and I can invest, and I know that I'm getting a predictable monthly income. And what I mean by that is I take a note and I look at it, and let's say I invest for a round number $100,000, and I want, let's say, 9% interest, or maybe 10 or 8. Usually it falls in those ranges. And so if I invest $100,000 at 9%, I can take that 9% times $100,000, which is $9,000 annualized. I take that annualized number, divide it by 12, and that to the penny becomes my monthly check on a full month of lending. So I look at it this way, and my wife and I look at it this way, is it sets us up as a pension. It's conservative. It gives us a predictable monthly payment to pay our bills, and allows us to free up our time to get to go to work, to get to help others, and enjoy life. Another area that I look for in passive real estate investing, in addition to being conservative, is I look for a win-win-win. And what I mean by that is there shouldn't be a loser in the equation. Someone shouldn't be making money at the expense of someone else losing. And the correct model for a passive real estate investor should look like this, in my opinion. You've got the borrower. The borrower should be set up to win. They should have the right lender. The lender should be able to have experience to vet that property, to vet that borrower, their experience, protect them, make sure it's a good product and it's a good deal. Once that's taken care of, position that borrower to win. Okay, so we have one winner. That borrower usually is the biggest winner per deal, and we want them to be the biggest winner per deal, and they're going in for maybe 20, 30, 40. These people are looking for 50% returns, okay? And again, we encourage that. The second position out of the three that we're looking for a win is the lender. The lender wants to win because without them, there is no money, okay? Without the borrower, there's no income, okay? But the third position is the passive real estate investor. And the passive real estate investor can come in and they say, you know what, I want what that lender is making. I want that security, I want a first position on public record, and I want that predictable monthly payment. And if you've got the right relationship with the lender's going to say, you know what, I'll sell you my position, do an assignment of mortgage, and give you my position, and they keep a percentage, and you get the lion's share. And now you've got three people in that circle that are winning. And once the borrower pays the loan off, they make their profit, the passive investor gets their money back, all three high five, and we all do it again.